So I've sent the note for cost accumulation, and so we will just explain. So there is a lot of literature, but most of the time they ask the same. So you also need to go through, but some specific calculations there. Sasa ukiangalia hii topic ya Katrina unaenda wapi? So hii topic ya cost hapo unasikia? So hii topic ya cost accumulation lazima ujue what is the objective of the material controls. We have essential requirements of the material control system. And then kuna centralized and decentralized purchasing, which you need to know the definition and advantages, which nimetuma kwa note. And then we have another one called the periodic inventory system and perpetual inventory system. And then kuna FIFO and LIFO. Then kuna other stock level control and its control. So ni mix theories and a lot of calculation. So I think maybe calculation na theory ni half. So when you talk of this cost accumulation, tutaangalia the inventory valuation, because the cost comes from what? Either the inventory, the cost inakuja from the inventory. That's why you need to know the inventory controls. And then tutapata, we also getting the cost from materials. Also, we are getting the cost from labor. We are getting the cost from labor. So we need to know how to account for the accounting or the cost of labor, the cost of material, and the control of the inventory, the control of the inventory. So ukiangalia hapo tumeambiwa the inventory valuation. So inventory valuation is simple term. The inventory valuation is like determination of the closing, determining the closing value at the end of what? At the end of the financial year. So kama ufanya kazi kwa manufacturing company, then they do the stock take, and then from the stock take they do the valuation. So from that valuation you can be able to get the total closing stocks. Now in manufacturing and also in this management accounting, most of the closing stock we are talking is work in progress, WIP, the finished goods, and raw material, the raw material. These form the part of the closing stock. These form the part of the closing stock. And then now we have something called periodic and perpetual stock valuation. So when you say periodic stock take valuation. So wacha ni explain, notes nimeshakutumia. So it's a system of an inventory or an inventory system where you only count stock. You count stock at the what? At the end of financial year. You only count the stock at the end of the financial year. So unapata, you are doing your financial year at December, then you will count your stock on 31st December 2024. 31st December 2024. That's why it is called the periodic.
Hello.
So it's, yes?
Hiyo notes ni kama sijapata. Umetuma kwa email? Sijaona.
WhatsApp.
Okay, kama ni WhatsApp sasa. Nimeangalia email. Kumbe ni what? Oh, okay, sawa.
Email sijatuma zote kwa email.
Okay.
Nimetuma, nitawaforwardia tena kwa email because sometimes hizi WhatsApp message zinakuwa zina disappear. Umeziona?
Nimeona.
Umezipata?
Nimezipata.
So we were discussing the system of the stock valuation, and we said we have what is called the periodic stock valuation, which you only do stock check at the end of the financial period. And then we have another one of the stock valuation, which is a perpetual. There is another one called perpetual. So perpetual is another system of the stock valuation, but this one now you do the stock valuation on a continuous basis. Ukiissue leo 10, you have to record that you have issued the stock of the 10 unit of certain stocks. And then if you receive the other stocks, maybe from the production or the supply, you also need to record. We have received certain this amount of the stock. And then, so in that case, which means this one you have to maintain your what? Your stock ledgers, your stock ledger card, your stock ledger card, because hii utakuwa una record on a daily basis. Uki-issue na uki-receive, you issue the stocks, which means the most advantage of this perpetual is that we can easily get the stock value at any given time. Ukisema leo we need to do our closing stocks of or our end books, nataka to close our books, you have already readily available stock value. But for this one, you will not do the accounts without, because you have to do the stock check. But hii utapata ziko immediately. But this one, especially when you have the strong systems, and this one, there will be no overvaluation or undervaluation of stock. But this periodic, there will be overvaluation and undervaluation because of errors and inaccuracy of the stocks. Now, so if you are using the perpetual system, then you need to maintain what is called stock ledger card. You need to have the stock ledger card. This is stock ledger card. We have them. We have the FIFO. We have the LIBOR. We have the weighted average. We have the simple. There are so many, but examiner is always interested in FIFO, LIFO, and weighted in your syllabus. So when you say FIFO, so FIFO is just first in, first out, which means the stocks which you receive first should be the one which you should sold first. First in, first out. So anything which you receive today, you should sold it first. But this one is only in the spare part industry. If you are in a spare part industry, then this one will be what? Will be ideal method. Of maintaining stocks, because the last in first out, because it will not get wastage ama itakuwa damage ama itakuwa obsolete. So because spare part cannot, it will take time to reduce its value. It will take time to reduce its value. So in this first in first out, we will be also using the price of, ukinunua maybe umenunua na 40 bob ama 50, tutakuwa tunauza that unit yenye ulinunua 100 na 40 bob until iishe. So hiyo ndio concept unafaa ujue. Hiyo ndio concept unafaa ujue. And then we have the lever. The lever is last in, first out. First in, first out. So the item which you received last should be the one which should be sold first. Should be one sold first. And this one is an ideal for what? Ideal method for perishable goods. So if you're dealing with the perishable goods like fruits, so you should sold first, the one which you receive last, to avoid what? Damages, and also maybe the expiry of the goods, So you don't need, maybe you just need to know the definition, and which is the best inatumika in which industry. So there is a lot of notes there. The average, you have been told that this is a method of stock valuation in which the selling price is determined by computing the average price of all the items in the stock, That is for what? Average method. I think where I was working some months back in a manufacturing industry, I was using average method to determine the cost per unit, because what I was doing is that you go to the ledger or the system, extract all the purchases, maybe from January to December. These purchases, especially if you're using QuickBook, you go to the QuickBook, go to the ledgers of purchases, extract that. You will find that you have the units here, or the quantity 1, 2, 3, 4, 5, 6, with their corresponding values here. The corresponding value, maybe this 1,000, 10 million, 2 million, 3 million, and the unit. So what you normally do, you come here and get the average price per unit. So this average price per unit, you get the specific unit here, you divide by the total value, so that you can get the unit, the cost per unit. So this cost per unit now will enable you to what? To get your stock valuation, because this stock unit don't offer the costing, so there's a lot of procedures there. But this is the concept of getting the cost over quantity when using the average. You take the quantity, you divide by the total value purchased. So maybe we can have an illustration. Last in, first in. Tuone past paper kama ziko. We go through the past paper. See, come on. If we have with the answers, will they give the level and FIFO? Because this one involve a lot of procedures. No, easy maswali za answers. Tuache tuone. Last semester, this year, August 2024. Ukiona tu FIFO level. or they will not indicate, yes. Calculate the value of the closing inventory using the first in, first out method of the inventory valuation. Go to number, this is August 2024, question 28. August 2024, question 28. Umeipata?
Yes.
So you have been told that you are provided with the following information: opening inventory 1st August with the unit and the cost, the receipts 5th August, unit and the cost, August date 12, the unit and the cost, and then we have the issue also, date 2 and date 18. Then we have been told to calculate the value of the closing inventory using the FIFO method of the inventory valuation. So it is a straight method. You only need to follow the procedures. So this was which company? We have not been given the company name, so you can just say the FIFO. So in FIFO, as per the notes there, we have the methods or the format, which you will have details here, or the dates. You can call it dates, and then from there we will have the units, the cost per unit, and then the value. So this first section here is what we refer as receipts. That is the receipts. That is the first section. The second section is issue, which we will have the same component: unit, cost per unit, and the value. And the last section is balance. The last section is balance, which we only need the unit and the value. We don't need the cost, the unit and the value. So arrange your data in that format. So date first is opening balance. So this date first here is the opening balance. So the opening balance will not affect our receipts and will not affect our issue, but it will affect our balance here. So tutaileta automatic unit, which is 50, and then they were purchasing at what price? 40 shilling. So 50 times 40, you multiply 50 times 40. Najua kuna 2 mahali. 5 times 4, that is 20. And then you add 2 zeros. Is it 2,000? That is for the 1st August. And then we have unaenda na dates. So ukiangalia the issue comes before receipt. So we'll have to go to date 2. We go to date 2. There was an issue. Issue is to sold out. So they sold out 30 units. So I'll come here, write that unit. At what cost? At what cost? Catherine, tutatumia which cost? Yes? Catherine, tutatumia which cost?
Sorry, I was unable to get you on good time. I'm way behind.
Okay. But
Yeah.
you are in the meeting, so which means you have to catch up. So we said the last in, the first in should be sold first out, which means whenever you sold out the first unit, so you should also sold out with associated cost you bought that item. So kama tulinunua 10, then tutauza na 10. So items tumeuza 30 unit of our opening balance, which means we will issue at that cost. So the cost of this opening balance ilikuwa 40. So we will issue at 40 shilling. So this time is this 4 times 3, 12. So we get 1200 here. Now we need to get the balance. So you will take the units, this one, 30 minus 50 to baki na ngapi? So we are now remaining with 20 units because we have sold out 30 units. The same case with the balance, we have to subtract this. Calculator. Where is my calculator? But make sure you have your own calculator. Don't rely on my calculator. So 2000 minus 1200, we're getting 800 here. 800. Another date here may come first is date 5 of August. So I will have date 5 of August is a receipt. So the receipt we have received 100 units. 100 units at the cost of what? At a cost of 50 shillings. So if I multiply here, I get 5,000. I will take this plus this because we are now receiving. So we are increasing our balance here. So which will be, it should be 120. That is the unit. This plus this should be 58. 5,800. 5,800. Then we go to the next date. The next date is date 12. Date 12 also, we have received 2,200 units at what cost? 45. So 45 times 200, 900. We are getting a value of 900. So I will take this plus the balance here, which will be 320. 5,800 plus 9,000, getting 14,800, getting 14,800. So from there, we go to date 18, which is date 18 now is date 18. Date 18 is an issue of 150 units. So nitakuja hapa. Now, this is where we will have a lot of cases here. So far, how many units do we have?
320.
320. This 320 comprise of several costs. Unagani nagani. So which means we have to issue the first unit which we receive first. Have we exhausted this 50?
No.
No, we are still remaining with 20 because we have already issued how much? 30, right?
Yes.
So we are remaining with 20. So if I come here, I will issue 20 at what cost? 40.
40.
At 40, which you multiply this one, 800. So I will remain with 300 here. If I subtract this from this, I will remain with 14,000. Now, out of that 120, 150, now we are remaining with 130. That is 50. 150 minus 20, we are remaining with 150. Still, we have another date 18. So which means we have done with 50 units. We are done with 50 units. Now we are remaining with 100 units. We are remaining with 100 units, which means 100 units we can issue all of it. We can issue all of these, which will come here. 100. We bought this 100 units at the store. Yes.
Nimepata hapo 100 imetoka hapo.
We are issuing 50, right?
150.
Yes, 150. And we said we are using FIFO, which means we must first exhaust what we bought or what we had at an opening balance. Ilikuwa ngapi?
50.
50. And
No,
E50 we have already
tulikuwa
sold
tumebaki na
out
20.
30 na tukauza 20. So already tumesha exhaust this 50. So E50 imeishia hapa. Now, and we are selling, so we will go to the next receipt. To receive ingine next when? To receive on date 5. On date 5. To receive how many units? We receive 100 units. Which these 100 units, because we are remaining with 130 here, we subtract 20, we remaining with 130. So which means we can sort out these all 100 units, right?
Yeah.
Yeah, that's why I will bring that 100 unit here, and then I will issue at this cost of 50. So I will issue at 50. So 50 times this one is 5,000 minus this one, 100 minus 300, we remain with 200 minus this one, is it 900? I'm not sure. Use your calculator. 14 minus 900 minus 5,000, remaining with 9,000. Now, if you add the two here, this one is 120 and we issued 150. So we are remaining with how many units?
That.
30 units. So the 30 unit also is still on date 18. Now we will issue the one we received on this one. We have exhausted this. We have exhausted that one. We will issue now on the one we received on date 12, which we issued how many units? 30 units. At what cost? 45. So if you multiply that, itakuja ngapi? 30 times 45, we're getting 1350. Subtract this, 30 minus this one, 170. If I'm not wrong, 200 minus that. And then, yes, 170. And then 9,000 minus 1350. You're getting 76.50. So this is our closing value. That is our closing value of the stock. That is our closing value of the stock. Yeah. So the correct answer there is A. The correct answer is A. The correct answer is A. The correct answer is A. So kuna swali? So you do the opposite with the FIFO. Let's use the let's use the same illustration. We do the LIFO because I've not seen any illustration here for LIFO. Unless kuna zile past paper za kitambo, sina past paper za kitambo. But make sure to download hizo past paper za kitambo. You will find those LIFO and FIFO there. But we can choose the same method, the same illustration to get the concept, because maybe another company will adopt this method. Another company will adopt LIFO the LIFO method. So we can't do the same using the same illustration. Let's use the LIFO. We see if we will get the different value here. We will get the different value there. So if we apply LIFO in this question, we said last in, first up, first out. Last in should be the one which should be sold out. So which means on date 2, I have to change mind to LIFO. We are not on FIFO, so usikwe confused. Now on date 1st, we had an opening balance of that, which our value will remain the same. Will remain the same. Now we said last in should be the one which will be sold out first, but in this date, hatukwa tumenunua on date 2, which means these values also will remain the same. Will remain the same. Will remain the same. But now here on here is the one which will change. So up to this point, Up to this point, all these values will be the same. Up to that point, all that values will be the same. But now on the third issue, which is date 18, we said first last in should be the one sold first. So which means on date 18, we should sold the one we received last, which we received last on date 12. So we will come here. We issue the all value here. We will issue the all value because on date last, we received 200 and we are issuing 150. So which means we can utilize the all value in the last date. So we'll come here and write 150. We write 150. Tuma issue na ngapi? 45. I issue na 45. So 150 times 45. 150 times 45, which will give us, this one will reduce, this one will give us 67, 50, 67, 50. No, we have to subtract that. 14,800 minus answer. So here I will get 80, 50. But now, the stocks level will not change. 320 minus 150, which we get, say, 70, 170. So the unit will not change. The unit will not change, but the value of the stock will change. You can see this one, we are getting the value of 80, 50. Another person, this one is using the Vivo. Another one for using the Vivo will get what? 70, 60. So you can see here, there is no, we don't know which one now should we adopt. Ukiangalia hapa ni kubwa, ini dogo, and you know what happened. If you overvalue the closing stock or you undervalue the closing stock, you know what happened to the profit and loss. You know what happened to the profit and loss. In fact, we have the value here of 850. If you look at B is this one. So the choice here B, ametumia level. E value, ametumia level. So don't get yourself mixed up. Juu utapata examiner atakuwa amekupea answers zote. Examiner atakuwa amekupea answers zote. So unless there is a question. So the average is just to get the average unit price. So the average is that you will just get the average unit price like 40 plus, and then but now it will go, yeah, because we are selling a 1 unit or one type of a product that will issue at a uniform cost, which you get the total, because for average you have been told is a measure of the stock valuation in which the selling price is determined by computing the average price of the items in the store. So in the store. So if this one, you can see the average price of 40 is 40 because we are still having the item 50 in the stock and we are issuing at 40. So the average price will be that. But now when it comes to this, when it comes to the last one, this one now, it doesn't follow the certain criteria of issuing. So you just need to know niko na stocks ngapi. So you can decide to sell the first one you receive or the last one. They don't have the specific method, but now the price will change. So you will do the average. So if it was to issue this one, you will do the average of the 40 plus 50 plus 45. Then you divide by 3. So whatever you are getting there, you will put here as the selling price, That is the only difference with the average. But you can decide to use any method to issue this or the 20 yenye ilikuwa ina remain up. So I think up to that first part of in our syllabus, which is for method of preparation, LIFO, FIFO, and weighted average method. We have done with that. Definition of a store ledger card. A store ledger card, these are all the ledger cards. So it does a ledger which used to what? To record the stocks or to maintain the stocks. We have seen the periodic and perpetual. So maybe you can move to the determining the optimal stock level, determining optimal stock level, which we have the stock level and its control, factors influencing the stock level. So hizo ziko kwa hizo notes, hizo matheory. So my concern ni relevant cost for inventory management. Relevant cost for inventory management. So when you go to the inventory control there, when you go to the inventory control there, yeah, inventory management. So there is a section in the notes for the inventory management. There is a section in the note for inventory management, which I think your examiner ndio wanataka. So we said the inventory management, this is the process of ensuring, I'm reading the note paragraph, your inventory management. So this is the process of ensuring that sufficient stocks are maintained in the store to avoid the shortage or excess inventory, which will lead to the what? Unnecessary stock cost, which will lead to unnecessary stock cost. And then we have the qualities of a good inventory system. The qualities of a good inventory system. Sharon, tumetoka meeting. Network. So the qualities of a good inventory system is that there should be proper coordination. There should be proper coordination between the department involved, so that like the procurement department should be also involved with the finance department and also the stocks or the cost accountant. So there should be coordination in those departments so that the cost and the quantity should be updated on a regular basis. Number two is that material requirement for each department must be probably planned via the purchasing department. We have in that note also the purchasing procedures, which you can't go through the notes and you will see the purchasing procedure. So for a good inventory system is that for anything that you are purchasing, you should order from the procurement department. Remember, the purchasing department is the procurement. So it should go through the procurement. The finance is the one which it take the last process, is the one which they will pay and they will account for it. But the department which take the whole process is the procurement. And then the third characteristic is that adequate information on the stock quantity should be what? Available at any given time. Also, the storage should be properly planned for subject to adequate transit and supervision. So at least make sure that you know at least two qualities or one quality, because examiner will give you the choice of the qualities of a good inventory system, and you have to select one. And then we have the objective of the stock control system. Why do we need the stock control system? Number one is that avoid undertaking, overstaking, or the stock out cost. To avoid undertaking or the stock out cost. Tukisema stock out cost, example of a stock out cost ni gani? Example of a stock out cost, assuming that Sharon anauza nini? Bags, tuseme ladies bags ama ni gani sijui. But so pate. And then we have another shop here, shop A. So we have two shop here. We have Sharon shop and A shop. Now, you are selling the same product. You are selling the same product. Now I come here, nikapata, you are out of stock, but it is here in what? Shop A. So in between here, there is some cost which the Sharon shop will incur, but the A shop will not incur. Number one is what? Ordering cost. Ordering cost. For a shop Sharon, for me to sell for me this bag, they must do the order first, which they will incur the cost of ordering. That is the ordering cost. Number two is what is called opportunity cost. Opportunity cost. If a client akuje kwa shop yako na apate hauna stocks, you have already lost a profit there, which is opportunity cost. This person ata incur is